What is up, Green Zone Fortunes? Boy, do I have a good one for you this week. Seriously, whether you've been with us for 1 week or 1 year or from the very beginning, I truly think you'll find a lot of value in what I have to cover this week. So first of all, I want to make a couple of promises. Number one, I'm going to try to keep my best to keep this video to 15 to 20 minutes, no longer, because your time is valuable. And so I want to keep this short and sweet, but give you a lot of value here. Second of all, I want to walk through 4 trades that I've recently recommended in my options trading home run profit service. Now, we're not going to conceal or veil the ticker symbols of these trades. I'm going to show you exactly what we traded and how we traded, and more importantly, why we traded these ticker symbols. And the answer to the why is because they rated very highly on our green zone stock rating model. And with that said, let's get started. So the whole reason that I put together this presentation is a member of my team last week asked me, Adam, have you explained to the Green Zone Fortunes readers how you use the Green Zone system in your options trading service? Now, this is an options trading service that I've been running since 2012, so 9 years now. And for the first 8 years, I only looked at momentum. I was only concerned with price action. I didn't care about a company's fundamentals, their valuations, their growth metrics, their volatility. The only thing I really cared about was their price action and whether they scored high on my momentum algorithm. And for the first 8 years, we've done extremely well. We've found very profitable trades using just momentum. But last year, I came up with a 6-factor green zone stock rating model where we look at valuations and quality and growth, and we look at volatility and size, and of course, momentum. And I thought there's no reason not to use this rating system as a piece of the puzzle when I'm finding market-beating options trades. Now, our options trades only happen over 2 to 3 months at a time, but I already found through a lot of testing and live results that this increases our odds of success and can increase our profits as well. So the whole point of this video is to show you how I use the Green Zone stock rating model, a model that you're already used to. This is the model that we use in our monthly newsletter, how I use that model in conjunction with my momentum algorithm to find market-beating options trades. So if you look at this Venn diagram, I find these options trades by 1, using the momentum algorithm that I've used since 2012, 2, finding stocks that rate highly on the Green Zone stock rating model, and 3rd, this is where kind of the art of it comes into play. I use my experience, my expertise, and some technical analysis, because not everything can be reduced down to a system. So there's a bit of an art and a bit of a science to finding these trades. So let's go through the first of these 4 trades. I recommended a trade to my home run profits readers in early March, and this stock actually came from the top 10 list that we publish to you guys in Green Zone Fortunes. So every single week you get an email from either myself or Charles on Wednesday, and at the bottom of that email is a top 10 list of stocks that you should consider buying. That top 10 list is populated, first of all, by stocks that have triggered a buy alert according to my momentum only algorithm, the same algorithm that I've used since 2012 to find options trades. Then of those signals, we run those ticker symbols through the Green Zone 6-factor stock rating model, and we provide to you the top 10 highest rated stocks on that list. So this is already a tremendous value that we're giving you every single week. And I actually use the list myself when I'm looking to recommend options trades in home run profits. So in early March, we gave as one of our top 10 stocks, Expeditors International of Washington. Now, this is a transportation stock, and it was on your top 10 list. Well, the very next day, I recommended a bullish call option play on Expeditors International to my home run profits readers. Now, this is a snippet of the alert that I sent them. I always give them specific buy recommendations, the ticker symbol, the price, everything that they need to go to place the order in their brokerage account. And I also give an explanation as to why we're making this trade. So in this alert, I said that I was excited to tell you that Expeditors International of Washington triggered my momentum systems buy signal earlier today because I've been watching this highly rated stock for a few months now. So again, you can see how I use the rating system. It was a highly rated stock, but I was waiting for it to trigger my momentum system. It wasn't enough that it just rated highly. I wanted to wait for the right time to get in. More specifically, I've been watching for a bullish breakout in this stock because it rates an 85 out of 100, with its highest factor ratings in quality, 95, volatility, 94, and growth, 89. Those are super high scores. So here's what happens. This chart shows the price action of EXPD, And the green bars show you the time in which we were in that trade. So the black bars, we were not in the trade. The stock was kind of meandering sideways. And then I got a buy signal in early March, according to the algorithm that I've been using since 2012. And I made a specific buy recommendation to buy call options on this stock. And the green bars are basically the ride that we've enjoyed in that stock so far. Now, the stock, since we got in early March, we've only been in this play for 1 month. The stock has gone up 11.6%, but already we've been able to lock in partial profits on our options trade of 51.5%. That was on 1/3 of the position. And then the rest of our position through today, as I'm recording this video, is up 93.9%. So we've nearly doubled our money on that portion of the position. So this shows you that with a stock gain, if the shares go up just 10 or 12%, you can double your money in the stock options. Here's the second of 4 plays I want to show you today. About a week or so after I recommended Expeditors International, I recommended to my Home Run Profits readers a buy recommendation on 3M. Okay, so 3M is a manufacturer of Post-it notes and healthcare products and industrial products and consumer products. They basically do tons of stuff. And it's a steady Eddie stock. It rated highest on my volatility score and on the quality score because it earns very strong margins. Now, here's an example of a stock that did not make our top 10 list because its overall rating on the Green Zone stock rating model was only 55. And you might think, why would I bother with the stock that was rated 55 when there are plenty of stocks that rate 80 or 90? Well, in this situation, I knew what was bringing down the overall score with 3M. Number one, its size. It's a huge company at $109 billion. So its size rating was very, very low at like 4. And the other thing that I noticed was that its momentum rating was low at like 26 because of the chart pattern, basically a pullback and a bottoming pattern that the stock has been in. So those two factor scores of the 6 were pulling down 3M's rating to 55, but I knew that its other factors, like its low volatility and its quality, and even its growth to an extent, were still very strong. And I showed my readers this chart right here, where I used some of my own technical analysis and expertise to know that this was a bottoming pattern. So basically, shares of 3M have gone through a pullback into early 2020, and they completed this bottoming pattern. And I was able to see that when they beat earnings earlier this year, it made a breakout of an important level at $180 per share. And then I basically knew that once it makes a breakout of this level, we are most likely going to return to the stock's highs, which was $260 made in January of 2018. So I set an initial target of $220 to $240 for the stock, and that's the play that we're aiming to make. Even though this stock doesn't rate a full 80 or 90 on the Green Zone rating model, it triggered a momentum buy signal. It's coming in out of this bottoming pattern, and it still gets great scores on low volatility, quality, and value and growth. So same chart here. In black is when we were not in the play. In green is when we were in the stock. So since we got into this, the share price has gone up 4.4%. So not that much, but we've only been in this for a couple of weeks. And so far we have a modest gain of 20% in the options. So the options pricing is about 5 times what the stock gain is right now. That's not always a fixed amount, but often you can make 3, 4, 5, 6 times the gain in the options that you can make in the stock. So this trade is far from done. 20% in an options trade is nothing to brag about. We expect to be in this trade a lot longer and for much larger gains, but I wanted to show it to you because it was a great example of where even stocks that rate mediocre on the overall Green Zone stock rating model can still be great plays if you use a short-term momentum algorithm and if you use some technical analysis. So just to let you know, like I said earlier, our ultimate profit target on 3M is $220 per share. And at that price, we will have the opportunity to nearly triple the amount of money that we invested in the call options that I recommended. All right, so moving on to our third stock. This was a pharmaceutical company. This was Supernus Pharmaceuticals. And it's basically a small drug maker that focuses on central nervous system disorders. And so basically it wasn't much reported, but this company is developing a drug for ADHD, and it's a non-stimulant. Most of the drugs out there right now for ADHD are stimulants, and it has many problems. So this was a non-stimulant, the first of its kind. And it basically it had phase 3 trials come out, and the results were very strong. The FDA had not cleared it yet, but I figured that was just going to happen later this year. So this was Supernus Pharmaceutical. Here's a snapshot of the buy recommendation that I sent to Home Run Profit subscribers in it was late January of 2021. And as you can see, this was an overall very well rated stock. Overall, the ticker symbol is SUPN. It rates 94 out of 100 overall, gets high scores in growth, quality, value, even in momentum, size, and volatility. So this is a great combination, especially for a pharmaceutical stock, that we thought there was a catalyst, that I identified a catalyst where throughout the rest of this year, we'd get increasingly positive news on the stock that would continue to boost its share price. So now I'm going to show you the same chart. Again, in black, we were not in the stock. In green, we were in the stock via call options, which is a bullish play. And this is an example I just want to reveal to you. Not everything takes off right away. So we get into a stock and it doesn't always go higher, higher, higher as soon as we get in. So for this stock, we got into the play, it went sideways for a couple of weeks, and then it went through a pullback. So we were actually in drawdown on this position by about 30 or 40%. But if you look at the right edge of this chart, you'll see that the most recent day of trading, the price jumped up to about almost $30. Well, here's what happened. Supernus announced that the FDA finally approved its drug for ADHD. And this came just this week. And so the drug is called Qelbree, and it represents the first novel non-stimulant treatment for ADHD in a decade. So again, this is a small stock. It's not getting a lot of publicity, but I think that once investors catch on that this is going to be a game changer drug for the ADHD pharmaceutical market, I think that this stock is going to absolutely take off. So even though basically the options that we bought in late January are now trading for roughly break even. So we bought them for $700 in January, and now they're trading for about $700. But I think that we can hold this position for several more months. And as more and more news comes out on this drug and the FDA's approval, I think that we have the chance to either double or triple our money in this. First of all, the FDA only approved so far. The company only asked for approval from the FDA for this for use in children. So they are now going to be submitting to the FDA a supplemental NDA for use in adults, and that's going to just explode the market size and the revenue potential for the stock. So again, the ticker symbol for that is SUPN. We haven't made a ton of money on our call options yet, but I think that over the next 2 to 3 months, we absolutely will. All right, so the final trade that I want to share with you today is a financial stock. And this is an example of when you get a momentum, a very well-rated stock and a momentum stock all in one, and everything just takes off, and you can earn basically 3 profits in one. So I have a new exit strategy, more or less, where we exit in thirds. So if we are up 50 or 75%, we take a third of our position off and we lock in those profits. And then once our position's up over 100, 150, or 200%, we lock in a second third of our profits. And then finally, we keep that last third of our position open for as long as we possibly can to try to earn the profits of 300, 400, 500, even 600%. So this is basically, this is a look at the trade alert that I sent to Home Run Profit subscribers. And I showed that OZK, this is a regional bank called Bank OZK. It rates overall 86 out of 100 on our green zone stock rating model, with the highest scores in value, 82, and growth. So again, it's kind of rare to get one stock that rates very high on value and growth, but Bank OZK absolutely did that. So again, here's a chart in black. We were not in Bank OZK. I issued a buy recommendation in late November of 2020. That's where the green bars start. And you can see the stock absolutely took off. It went from about $28 a share upwards of $44 a share. So here's basically the stock has gone up 38%. That's the shares, not the option, but the shares have gone up 38%. Compare that to a regional bank ETF, KRE is up 31%. Compare that to a broader bank ETF, KBE is up 25%. And compare that to the larger financial stock sector, XLF, which is up 18%. So this individual stock that I picked based on my momentum algorithm and the green zone 6-factor stock rating model has beat all of these broader diversified ETFs in the financial space because we went with Bank OZK. So again, that's the stock. The stock has gone up 38% in the 3 to 4 months that we've owned it. We haven't owned the stock. We actually made call option trade on it because this is an options trading service. And those options have gone up. Again, we've been able to exit this in thirds. So first of all, the position went up 100%. We had doubled our money. So I told subscribers to take a third of their position off, lock in those profits, bank them, invest them in other positions that we have coming up. Then it went up even more. The position was up 247%. So I told subscribers again, lock in a second third of your position. So at that point, we locked in 100%, we locked in 247%. And now the position is still open and the rest of our position is showing an open gain of 293%. So these options don't expire for another month or so. I think it's certainly possible that in that month we can get another rally in OZK and maybe earn profits of 300, 400, or even 450% in those options. So again, that is why we use a combination of the momentum algorithm and highly rated stocks based on the green zone stock rating model. Okay, so those are the 4 trades I wanted to walk you through today. Those are not obviously the only 4 trades I've ever made in the lifetime of our options trading service. What I'm most proud of is that this service has a nearly 10-year track record. Once you become a subscriber, you can log in with your credentials. You can view our model portfolio. You see all of our current positions and exactly how much they're up or down. You can see every single one of our past positions going all the way back to November of 2012. And you can look through each one of those positions and see exactly how we did on them. And if you look at the top of the model portfolio, I'll just show you this now. It shows you kind of a summary. And we've basically, since 2012, put on 227 positions. We have an average gain of 44%. That includes the big winners, the small winners, and even the losers. And our average hold period is 72 days. So just about 2.5 months. So, my message to you is if you're not making 44% every 2.5 months or so, then this is certainly something you should consider doing. We're using the green zone stock rating model, a model that you're already used to and you already see the benefit of. I'm using that in conjunction with a momentum algorithm that tells us exactly when to get into these highly rated stocks, as well as my own expertise in technical analysis, which I really enjoy sharing with you in my weekly updates. So that's my presentation for today. For Green Zone Fortunes, I'm Adam Odell, Chief Investment Strategist of Money and Markets and founder of Home Run Profits. I hope you found this informative. I hope that walking you through the 4 trades that we made shows you how I use both systems in conjunction and how that increases our odds of success and it helps us find truly market-beating gains. So thanks for your time and hope to see you on the inside of Home Run Profits. Thanks so much.